One and all, hope you're doing okay. We have the risk sentiment overview for the 20th of the 7th, 2022. Risk calculation is that we had a big change on the 24-hour difference in that the retail guys have shorted indices, and I'll show you that, which is actually quite interesting. We didn't have any signals last 48 hours, and that's like a leading indicator that something was developing in the background. So our signals have to have sentiment checks and technical checks, and now what's happened is that the technical is shifting, and that's great because that just gives us an extra degree of confidence for our signals. But when we don't get any signals, it tells us that something is changing. So the fact that we didn't have many signals Monday, Tuesday was a good sign in itself, because it gives us that information that there's something developing in the background. So this reinforces the idea in that the risk sentiment is shifting now this week, which is very interesting. Don't forget we've got FOMC next week, so that's probably going to be a risk off event, and it might be sell the rally at the event. VIX is below the 26.5, and just something that I put into Discord last night about the US 30, but we'll get there when we get there. And the US yields are pretty ugly, so we're not out the woods yet. Okay, so risk on, 24-hour difference, the VIX is risk on, and the fact that we didn't have any signals tells us that something is developing in the background. And you know how FX ties into risk sentiment as well. So the fact that we didn't have the signals tells us something was changing in the background. Here's the US yields. They all rose. Traditionally, that's a risk-off sign, but it wasn't that great a change. And I guess we have to see what happens tomorrow. So if they spiked aggressively, that would be quite risk off, but a subtle increase is possibly not that risk off, but we'll have to see how this develops. So currently this is a risk off thing. This is actually quite risk on, and if we continue this way, we'll be risk on by Friday, and then it'll mean that the trap's properly in as well. So that's that. Setting the line for 26.5 for VIX. You should have that because that's really an important level. That's your yearly pivot. That's the 52-week midpoint level from the high of the year and to the low, and that's the 50%. So if we cross above or below, then that's obviously important. Lots of shifting, like I said at the top of the video. AJ, EG, France, Germany, S&P, US 30, dollar CAD shifted, so that's interesting. We flipped to sell at the high level, and dynamically was a big shift as well. Remember, you want colours to match, okay? And oil as well. Oil flipped to buy. And there's the key. So, you know, get colours to match. You maybe not want to trade pound USD because it mismatches, okay? Weekly majors, there's a dollar on the back foot. Hopefully you can see that. So, you know, the dollar's just like letting its foot off the gas a little bit, and it probably will resume its strength next Wednesday for the interest rate hike, and they're going to hike 75 basis points. It's unlikely they'll do a full point, but if they do, that's going to give the dollar some big strength. So currently undergoing a bit of pressure, and I think we know why, because of the things are changing in the background. Okay, and this is why these the Quasidb service is pretty amazing, because it gives you that information that we're shifting, there's stuff going on in the background, and we can see that develop. There's the dollar weak, there's the Kiwi strong. Okay, so I think that what's going to happen is this is going to gravitate up, and it's going to join yen. Pound is obviously going to be tricky, so avoid pound. This is the strong sell section, this is the strong buy. The fact that dollar and yen are up here, that's quite risk on, okay, because these are regarded as safe havens, or they used to be. Yen used to be. I still think it is. It was just being under pressure by central banks. So, but this is if the dollar and yen come up here, we can probably be quite risk on from an FX perspective. So there's today. You can see today, and then from oh, hang on a minute. That's yesterday, and this is today. So you can see how they've added shorts, which makes that more of a buy for AJ. You see, that number's gone away from zero, and that number's going towards zero for AU. See, this is where we were, this is where we are, and if we continue, we'll go into buy for AU. Note that FX SSI has flipped to buy, and that aggregates multiple brokers. So What you want is a movement towards zero or a movement away from zero. Hopefully that's quite clear. I think it's quite simple, but it might not be. So let me know if you've got any confusion or any questions. S&P, so they went long, so we fell, and then they shorted it, so we went up. And it all depends what they do. If they sell it, we'll continue higher. If we'll have to wait and see. That's why I put the hexagon, because it gives us a what-if scenario. We don't know what they're going to do, whether or not they're going to hold on to that bias. We don't know, so that's why I put hexagon. So circles are like definite things that have happened, and hexagon is like a what-if scenario. We don't know. That's one thing that's quite annoying. We don't know what they're going to do. We know if there's a scary news event, what they'll do, but we don't know if they're going to release a scary news event. You know, it's just, that's out of our hands. And US 30, you know, we made a buy here because, you know, the cross over the 21 moving average and the SSI line, up we come. Germany 30, or we could say Germany 40. It says 30 here, but buy because they shorted it. They went long, but it really didn't really do much. It did fall admittedly a little bit, and then they shorted it here in quite an aggressive way, and by shorting it, up we come. Gold is probably going to break this support, I think. Really, you know, it's hard to say what they're going to do. At a high level, it should be falling, and they've gone long. So really, it should be falling because that agrees with the high level. The static agrees with the dynamic. And so that's the level I'd be watching. I put out a heads up where I'll target if I was trading it. It's like a trade recommendation on the Discord. So have a look at that in the gold channel. And what we want is a break below 1705. That's the key. Okay, and a sustained break and hold below. It's probably going to bounce around, which would be quite frustrating. Yield curve's out of bonk, but you knew that anyway. What we want is a succession of like increments higher over time, and not these to decrease, which is like a risk-off indication. Okay, they're all very high, so that's a little bit of, you know, a warning really. And they all rose a little bit over the last 24 hours, and maybe they're trying to revert as opposed to invert. Maybe that's what's happening, is that some of these are being pumped a little bit higher than the others, so we can get like a natural ascension. Maybe that's what's happening. They're just like, there's like a hustle, and they're repositioning for a risk on scenario. But then again, FOMC is going to be quite risk off next week, so maybe it would be sell with the rally at FOMC, I think, because this is a risk off indication. So hard sentiment saying risk on, so we have to just trade carefully. Lots of movement on the dollar, lots of red, and you can see how they they match on dollar CAD and dollar Swiss and gold. There's a match on EJ, and there's a match on AJ and AU. Mismatch on EU, EA, GU and NU. But it's not too bad. It's got quite a few colours matching there. There's the dollar strongest, there's the Kiwi. The dollar is weakest and the New Zealand dollar is strongest. And AU flipped to buy, which I mentioned at the beginning of the video. And just a reminder to get the FX SSI code while you can, because after the 1st of September it reverts to 10% discount. So if you get it now, it's a ridiculous discount, but if you wait for after September, it won't be such a good discount. It'll cost you $31 as opposed to $10 if you get it now. So get the annual plan, unless you want to spend $30 a month. You might as well get it for 10. And behavioural score matrix. So luckily someone spotted there was a little typo on this, which I've now remedied, and this has now been fixed. What it does tell us is that whatever the herd do, if they go long or short, they should be getting punished. Now what's happening with the dollar is that they're going long on the dollar and they're getting punished. So a high score tells us that basically traps in, and because the retail guys are stubborn, they're going to hold on to losses, and the more they do that, it makes it worse for themselves. So this is quite a high score for this time of day. So anything over 50%, I'd have confidence that the sentiment is going to be better than your casino. If we're at this high, we've got a very good statistical edge, you know, above all our peers. If we go even higher, it's even going to be better odds. If we get 80%, probability, we've got 80% probability of success if we just look at the sentiment. Below 50%, you might just go to the casino or just rely on technicals, and that will probably see you through. But this high is quite good, and so hopefully that's clear. And we want to have stats behind us, because we don't want to be thinking like trading's a casino. It shouldn't just be 50-50 like a coin toss. It's actually we need to have like an edge to the market as well, and this gives us that edge. And also it helps us if you get FOMO as well. So if you're having FOMO, just simply don't enter for below 50%, and that's quite a good easy way of rectifying that. And CAD is being naughty, but we've got the inflation data, the CPI from Canada later, so that might shift potentially. So they're getting paid on the CAD, but they're getting destroyed on dollar and Kiwi. So maybe CAD will be tricky today. Patience, so that's that. And like I was saying, the lack of signals is telling us that something is developing. Since we have the technical checks in, it does prevent false positives, which is great. See, small losses is fine, we can handle that. But while we're in this risk transformation phase, we likely won't have many signals. So that's what's going to probably be the case. Today we might not get any signals, maybe tomorrow and Friday, but then next week the sentiment should be matching the technical. Okay, so we're currently undergoing a transformation in the background, and the fact that we don't have signals tells us that something is brewing, and so that in itself is incredibly powerful, that knowledge. So hopefully this bulletin's useful. There's the shifting on the technical. We're now neutral on EU. We're now sell. We had come from strong sell, strong buy for dollar yen, but there has been that for a good while, and neutral on dollar Swiss. So we won't open anything that's not strong buy or strong sell, and it looks like we're veering away from that bias, and so therefore we're shifting on the risk sentiment. Economic calendar, there's the inflation rate from Canada, so obviously be very careful. It's going to bounce around a lot, especially the dollar CAD. And so busy today, enjoy your day ahead. Hopefully it's helpful. No more heat wave, which is absolutely fantastic. It was a nightmare the last 2 days. I couldn't do any trades because it was absolutely roasting. So that's it. I'll wrap up now. I don't want to make it too long. It's probably quite long already. There's a lot in here, so hopefully you're okay in understanding everything. If there's something you don't understand, just let me know. Maybe this is confusing, so if it is, let me know and I'll explain it. And have a good day, and I'll speak to you guys tomorrow.